Mark, this has been an impressive run, no doubt about it, but how much of this is tied strictly to this idea that we could see at least an ETF or multiple exchange-traded products with cryptocurrency in the coming 2024?
Yeah, Dominic, I think a little bit of the recent moves, maybe over the last month or so, certainly reflected some enthusiasm about the ETF approval, which we expect that first week of January. Actually, I'll predict January 8th, crown the king on the king's birthday. But I think most of the rise this year has really nothing to do with the ETF at all. We were very depressed a year ago. Really bad bear market following the FTX scandal. And the markets were really washed out, far below fair value. Fair value at the time a year ago was about $32,000, $33,000. We do a Metcalfe's law, Metcalfe value for the network. And that fair value has drifted upwards into the low 50s today. And the price has just climbed relentlessly over the past year to get closer to that fair value. As we head into the new year, we've got the halving in April or May of next year. That's exciting. That'll put additional demand pressure on Bitcoin. And as we enter, crypto fall next June, things could get very exciting. So we think the market's just getting warmed up here, Dom.
So Bitcoin, we've talked about quite a bit because the prices have gone up the way that they have. Other cryptocurrencies have as well. Ethereum, notably, soaring as well, maybe not getting as much news and coverage as Bitcoin has. But how much of this is Bitcoin alone, and how much of this can be optimism tied to other parts of the crypto market as well?
Really important question. When you think about, Bitcoin is rallying as people realize that, it's secured its place as digital gold. I mean, it's gone from 15 years ago to 850 billion of market cap today, 20% of the way toward monetary equivalence with gold. So that seems pretty well established. But the other digital assets, the other cryptos like Ethereum, Solana, Avalanche, they are more toolkits. They're for developers to build applications. And, we're just starting. 2024 is the first year of a very long tech cycle. Started back in 1954 with the mainframe. 68 was the microchip, 82 the personal computer, 96 the internet, 2010 the mobile net, and 2024 the truth net, where we basically move away from the trust system and use blockchains for establishing truth. So there's a lot of work to do in terms of developing applications. And most of the value, Dom, has been accruing to the protocol layer. Very different than Web 1 and Web 2. In Web 1 and Web 2, you and I can't own TCP/IP, which we're using right now to talk, but you can own Bitcoin, Ethereum, Solana as the underlying protocols that are building the new web.
Mark, and we've just got a few moments left here. There are a lot of folks who still need to be convinced that this is a viable means of transaction. Jamie Dimon, CEO of JP Morgan Chase, is not a big fan of it. Others aren't as well. How do you respond to that?
Well, when your livelihood depends on not understanding something, you won't. And Jamie understands it. He's a very smart person. But he and other people in the financial services industry are afraid, quite honestly. This technology, blockchain technology, will do to financial services what the internet did to media and commerce.
Sure.
It changes the landscape. You and I can now exchange value without an intermediary. And for 838 years, we've needed intermediaries to exchange value. The banking system, finance system, accounting, auditing.
Right.
All of those things are less valuable in the new world with new technology. But it's inevitable.